Good evening, everyone. Welcome to IQI Canada Evening Talks. My name is Yousaf Iqbal, country head for Juwai, IQI Canada. And again, this is that time of the month when we have none other than Shan Saeed, our chief economist, all the way from Malaysia. Good morning, Shan. How are you doing?
Good morning, Yusuf. Greetings from Kuala Lumpur. Good to be back, and good to see you after a very long time.
Same here. Thank you so much always for your valuable insights, which you share with us. And again, welcome to the show. So, Sean, always before I go to my questions, I always tell people if you really want to know what Sean is doing, follow him on LinkedIn, follow him on Facebook. I do that, and I see that Sean is all over everywhere in the media. So you were recently cited in the latest issue of Chicago Boot magazine, and also I saw that you had a first interview done with the Vietnam news agency. So tell us a little bit about that.
Yes, again, a great honor for me as a Pakistani that this is the fifth time I have been cited by University of Chicago Booth Alumni Magazine. So it is not just the press and media that is following me. Even my own university is, they're trying to follow me, and whenever I am spotted in press and media, they try to highlight my credentials in the magazine. That magazine goes to over 40,000 alumni
Wow.
globally. We have around 55 to 60,000 alumni of University of Chicago Booth School of Business. So it's a great honor for me. Secondly, last week I took my first interview with Vietnam News Agency. Again, people are following me on LinkedIn, and this lady who is a resident correspondent of Vietnam News Agency, and she has been following me on LinkedIn for the last 2.5 years. So she
Wow.
just moved from Vietnam to Malaysia, and she said, "Shan, I want to take your interview in February." I said, "I'm on vacation in February. Maybe we can do it in March." So again, I think my 2022 insight is what is my plan. I want to go global. Yes, I have captured the Malaysian press and media market, but I have made inroads in Indonesia, and I'm slowly and gradually making inroads in Vietnam and Philippines. So I think part of my personal branding strategy is that I want to move aggressively in the ASEAN press and media market. I think they are looking for substance. Nobody is interested in tabloid stories or Cinderella stories or James Bond stories. So it's a good start. 2022, I think it's a very exciting year, and I see a lot of opportunities moving forward.
And we would love to, welcome you to North America, to Canada side as well. Very soon, things have opened up. Airports have opened up. A lot of restrictions have gone out. So hopefully, very soon we can see you in North America as well.
God willing.
Absolutely. So, Sean, let's get to the questions. And of course, I'm sure all our audience would like to know about the questions. So, guys, anybody who has any questions, anything while we are at the session, please feel free to ask us. And if you're joining us, do just come in and say hi to us. We got somebody join in. It's Ardavan. Hey, Ardavan, good evening to you. Thank you so much for joining.
Good
So,
evening.
just coming straight to my first question, Sean, what's happening to the yield curve? Sean, I know that you follow the debt market very closely. What's the forward guidance to the players and the market at the macro level? And what's the probability of recession hitting in advanced economies?
Yes, Yusuf, this is what everybody is talking about. Yield curves, especially the twos and the tens, are already inverted. And whenever your yields curve, the US Treasury yield curve, it's inverted, recession happens after 12 to 15 months. But the way things are going at the moment, I believe that recession will come much sooner. We at Juwai IQI expect recession to hit the advanced economies by H2 this year, in the second half of this year. And normally people think that, recession is a business cycle. Absolutely wrong. Recession is a consumer cycle, because when consumers don't spend, businesses don't invest, the economy actually shrinks. And that's where they say when you have two negative quarters of GDP growth, that's where recession comes in. So recession is not a business cycle; it's a consumer cycle. It is going to hit The advanced economies, we have already put it in our April issue of newsletter that recession is going to hit advanced economies, especially US is struggling, Europe is struggling, and Japan is moving like a headless chicken. They don't even know what is happening. So I think the game has moved, pivoted towards Asia. So you have three regions. You have Asia, Europe, and US. Europe and US, they are struggling. The game is in Asia. Asia has opened up after successful vaccination of the population. Look at Vietnam, Singapore, Malaysia, Philippines. All these economies are opening up, and everybody is looking forward to visit Malaysia, Thailand, Indonesia. So I think once you open up the economies, it's going to give boost to the local economy, the businesses. So North America, I would say yes, the recession is going to be very severe this time. And why do I say? Because you have two systematic risk in the market. You have hike in interest rate, as Jerome Powell already mentioned that in May, if need arises, 50 basis point will be raised in May, and by year end we are expecting the discount rate to touch 2%. If discount rate touches 2%, then your yield curve, 10-year yield curve, will touch around 3.5%, 4%. Obviously, it gives direction to and guidance to players that inflation is serious. That's why Fed is raising interest rate. And we have been saying this since last May that this inflation in US is stubborn, is serious, and is very strong, and it will continue to rise. Global economy will not recover before 2025. So this inflation thing, recession thing will go on, will rather linger on for quite some time before the economies actually recover. So those investors who have taken position in equity and bond market, they will have tough time because we are moving into 1970 era where interest rates are going up. We have stagflation, growth for lower. So most of those investors in 1970s, they took position, and I'm doing that in the May issue of Juwai IQI. What happened when the interest rates go up? Obviously, smart and sophisticated investors, they go into real assets, and real assets mean real estate has performed much better than financial assets, that is equity and bonds. So commodities, real estate, arts, farmland, all these asset classes will perform much better during these times. So I think recession is very much on the cards, and we expect H2 2022 will be the timeline for recession in advanced economies.
Wow, wow. Yeah, you're right. For talking about the interest rates, my next that brings me to my next question. Talking about the negative interest rates in the bond market. Now, the global global sovereign bonds in December 2020 were trading around about trading at a negative of 18 trillion to now negative of 3 trillion. So, what's the signal to the market? Where is the system heading towards? Is free market under duress of with negative interest rates? What are your insights on that, Sean?
Yes, Yusuf. It reminds me on 14th June, Wednesday 2016, we were invited by EPF. EPF is one of the top sovereign wealth fund uh, in Malaysia. It's called Employees Provident Fund. They invited IQI to share thoughts on the global financial markets. And the first slide that I shared on 2nd June, I still remember 2nd June 2016, in Financial Times, global sovereign bonds were trading negative $10 trillion. And as you rightly mentioned, in December 2020, they were trading at $18 trillion. So this is a signal in the market. You lend your money to someone and then you pay them the privilege of lending money. It doesn't make sense. Financial markets, they don't work in with negative interest rate. And I have shared with Estro Awani yesterday that capitalism and financial markets, they work with positive interest rate. So capitalism is just like a bicycle. Any child can ride a bicycle forward. No one has ever ridden a bicycle backwards. Have you ever seen people riding bicycle backwards? No,
Yes.
everybody would like to do it in a forward way. So I think this is a clear signal that there is something wrong in the system. The markets are heading for real bazooka. And once the inflation goes up and yields go up, and central banks, they lose control of the market, obviously they will have investors, they will get nervous, and once they get nervous, they go into tangible asset classes. So what we have been sharing all along for the last 1.5 year, and it has proven that sophisticated and smart investors who understand history and economics, they have always taken position in tangible assets where you can touch and feel. Look at gold. Look, gold is over $1,915 per ounce. At the start of the year, it was just 1,800 dollar per ounce. So investors are feeling nervous. The bond and equity markets, they don't really hedge themselves against the currency risk. They are feeling the pressure. Yusuf, just imagine, we have not even finished the first quarter, and investors have lost $7.9 trillion in the equity
Wow.
markets alone. Just imagine,
Wow. Wow.
$7.9 trillion, which is more than the GDP size of Spain,
Yeah.
Canada, Indonesia. So
Wow.
just imagine $7.9 trillion off the table, gone with the wind. So I think things are very, very challenging. Markets are in a mood. Markets are whistling past the graveyard, and investors who have taken long positions, especially in equity and bond markets, they will be punished. So we have been sharing that bond market is the worst asset class to be in. Your income is 2.5, your yield is 2.5, and the inflation, the cost of living is 8%. So how can you make
You
money,
can't.
when your inflation is 8 and your income is 2.5? So you are not making money. You are
That's
having a
true.
negative saving when you have taken position in the bond market. So I think things are very, very challenging. So those smart and sophisticated investors who have taken cue from the bond and equity markets, they are retreating. They are offloading their position and they are going into real estate. I have shared some insights with you. You can share it later when we come to
Sure.
that point.
Sure. So, having talking about the tangible assets, so I just want people to know that Shan, he's been talking about holding on to tangible assets. The first time I met Shan was in 2014, 15, when we were at the Cityscape real estate show in Dubai, and and I asked Shan, what do you think, investors should look at? Shan, what should they invest in it? And the first thing Shan said, Yusuf, I just believe in tangible assets, land, gold, silver, something you can put your hands on, something you can get on that. So again, I know that Shan, you're very, very particular about that thing. And now again, just to prove what Shan has said, $7.9 trillion lost in the first quarter by itself. So again, people who've taken their position in real estate, gold and silver, tangible assets, even it goes down with the value of time. If it goes down also, if we haven't not seen it, but if it does goes down, it just comes back again on that. Sean, yeah,
Sorry
go
to
ahead.
interrupt. One thing I would like to add that I have been sharing with you, in tough time, the only fixed asset that goes up is land.
That's
So
right.
people who understand history and economics, they are very quick. So if you see right now, land prices globally, they are going up, especially in farmland. People are taking position in
That's
agriculture.
right.
You love coffee, you love rice, you love wheat, so do I. So I think farmland prices are going up, and again, it's land.
That's very true. And very interestingly, we've been getting a lot of interest in land opportunities, in investment opportunities from our clients as well, who've been looking for the land opportunities because they know. And what we've also seen historically is that we have seen that the lands have really, really gone up in prices in Canada as well. So that brings me, Sean, to my the next question, which is the sovereign debt risk, systematic risk, geopolitical risk, inverted yield curve, recession risk, inflation risk. Uh, can we expect more risk or troubles ahead? What we can expect in the coming 2 to 3 quarters?
Yusuf, can I tell you something? There are more risks coming into the market,
Wow.
and your job becomes very, very important, especially in Canada, to share substance with your valued clients. That these are hard times. So you have to ask two questions from your investors. Do you want peace of mind? Or do you want sleepless nights? If you want sleepless nights, please go to equity and bond markets. But if you want peace of mind, take position in real estate, take position in gold, silver, arts, um, oil and gas, farmland. These are the asset classes that can give you peace of mind. But if you talk to me about Bitcoin and equity and bond markets and I would say you will have sleepless nights. You will get at 2 o'clock in the morning and you say, I've lost $10 million. Holy
That's
cow, where are
true.
we? But
That's
if you
true.
have
That's
taken
true.
position in hard assets, tangible assets, you should have a peace of mind.
That's true.
Yusuf, going forward, I think two risks are coming into the market. We have already shared in a June or July newsletter last year when we talk about four risks that are coming into the market: the sovereign risk, uh, the liquidity risk, the valuation risk, and the systematic risk. Right now, we have systematic risk already in the market, that is hike in interest rates and inflation. Sovereign global sovereign bond risk has come down a bit from 18 trillion negative to 3 trillion now. But
Yeah.
two risks are coming very strongly because of quantitative tightening by central bank. One is the liquidity risk. What the Fed is or ECB is making the same mistake what they did in 1933, that they retreated from the market. They took a pullback. Once central banks they take a pullback, you don't have enough liquidity in the market. Obviously, investors will get nervous. Markets runs on equity on liquidity. If markets they don't have liquidity, obviously investors they don't have enough room to
True.
play. And
True.
when there is not enough liquidity, obviously the markets will get nervous and investors will panic. And when investors will panic, they will have tough time in the various asset classes. So I think the second risk that is coming very strongly, valuation risk. Already a lot of stocks have taken the beating because valuations are all time high. Central
Yeah.
banks have pumped money in the last 15 years, and they have created, the balance sheet of the central banks have gone to $30 trillion, which is
Wow.
30% more since 2020. So just
Wow.
imagine you have $172 trillion of liquidity right now in the market, globally speaking.
Wow. Yeah.
The total liquidity in the market is 172 trillion. I have just put it on my LinkedIn and Facebook. Once central banks they retreat from the market and there is not enough liquidity, obviously markets will panic and investors will get nervous. So once
That's
you
true.
have this situation, I have my favorite word from GMAT. It will be bazooka. It
Yeah.
will be shenanigans in the market. So I think tough times are coming, and investors they should try to secure themselves by taking position in tangible assets, because we are into the same era of 1970 where you had stagflation. What is stagflation? I repeat, higher inflation and lower growth. So, in order to protect your wealth, which is my next topic for Astro Avani, how to protect your wealth in these turbulent times, how you navigate through tempestuous time, is by taking position in hard assets, in tangible assets, so that you can have peace of mind. Nobody can give you guarantee of 20 or
True.
30%.
True.
Even if you make you a single digit return in these turbulent times, I think is good enough. The strategy should be that your wealth, your capital should be protected. And anything
Hmm.
above your capital, single digit, I think you are fortunate and you are smart.
That's right. That's right. Having said that, you're absolutely right in terms of the tangible assets. It's where, again, I know I'm repeating myself, but just coming back to how important it is to hold on to tangible assets because, in times you will see them always appreciating, rather than investing somewhere which you cannot really not sure about. And of course, when we talk about bitcoins or the cryptocurrencies, I know that Shan is a big no to it on that. I've been following that Shan very closely. I've come across with so many friends who has always said, "Oh, you know what? This is what we're going to do in cryptocurrencies. This is what we will be doing in Bitcoin, things like that." I personally have always kept my hands away from it. Just because while talking to Sean and the global insights which I get from Sean, that makes so much sense. That why would you invest in something which you cannot even see or feel? You know, Zishan, coming back to we were just talking a little while ago, about the Canada, that how Canada market is coming along and how immigrants are coming along in the market, and a lot of people are coming in. But what we have recently seen is the hike in the interest rate, both in USA and Canada and UK. You know, of course, which question to you is that which asset class comes out the winner? How investors can leverage from our insights about the economic history, and of course, finally, I would also want to know your views about the Canadian real estate market.
Yes, on 2nd March, Wall Street Journal, you were sharing with me that Bank of Canada hike interest rate. Even if Bank of Canada hike interest rate, I don't see the market settling down. The market will continue to stay bullish. The average housing price in Canada right now is $1 million and above. 3 years
But
back, it was 700 or $800,000, but now the average house price in Canada is $1 million. So that clearly sends signal to the market that market will continue to stay bullish, and investors will make money by investing in tangible assets. And you were sharing a graph with me right now. In the last 22 years, the average price in Canada has gone up by 15.68%.
yeah,
And since 2000, the real estate prices in Canada has gone up by 345%. So you just imagine simple math, 345 divided by 22, it comes
yeah,
to average increase 15.68%. Where can you get
you can't
15.68% with peace of
nowhere,
mind? With peace
nowhere.
of mind, not
That's
Bitcoin. Whenever people
yeah,
talk about Bitcoin, my brain stops working. I don't believe in Bitcoin. I only believe in tangible assets, because people who understand history and economics, they have always taken position in tangible assets, no fancy stuff. So I think this graph, if you can share with your valued investors, look
sure,
at Australia, 361%, UK, 232%, US, the only country that did not get enough traction from investors is Japan, because Japan in the last 30 years could not attract investment
that's
from
right.
those investors, especially in the real estate. And the
Yeah,
Japanese have been trying, because not enough, the prices are too high, prices are not affordable. But in countries like Australia, Canada, prices are still manageable. Investors having $1 million, $1.2 million for them is still a good buy, because it's a good entry point. The market will continue to go up. I still remember in so many episodes you have been mentioning that 1.2, 1.3 million immigrants are
that's right.
coming in the next 3 years.
That's right.
So where would they go? They
Yeah,
need housing, they need schooling, they need education, they need healthcare for themselves and for their
yeah.
families. So I think I would say the market will continue to stay hot, not only in Canada but also in US, Australia, UK, in other parts of the world. Look at IQI, we are still very strong in Malaysia and
That's
ASEAN.
right.
And all credit goes to our warriors who are doing a tremendous job. And
True.
again, you have made a tremendous turnaround for Canada. From 25 million, you have taken to 200 million. And I hope you will take from 200 million to $2 billion soon.
Oh my God, this 2 billion is so interesting. I hope Kashi is listening to this. When Kashi was here, you know, our targets have already gone to 2 billion. So
This is
all
10
this is
times.
all
This is
great things like Kashi and yourself, right away from 200 million to 2 billion. So that's what the target is. You're right. We're definitely working towards it, and taking the system next $2 billion for sure.
So, what do you say, Yusuf? How is the market right now? Since you are sitting over there, or kindly share what is happening in Toronto, Calgary, Vancouver, or Mississauga, or Cambridge. Share your insight, please.
Sure. So very interestingly, first I'll talk about the Toronto real estate market, and then I'll talk about Calgary market as well, because I was talking to somebody in Calgary today. So talking about the Toronto real estate market, and of course, if you're looking at from a year-to-year perspective or a month-to-month perspective, we have still seen, at least till the month of February, we have seen that the inventory has been very less. So supply has been really less, and the demand has been very high. So we are talking about, I was just looking at the stats and showing about 15% increase on an average, which is very true. But last 2 years or 2 and 3 years, we're seeing an increase of almost 25 to 30% increase on this. So, talking about the average detached home prices in the Toronto area has gone to almost like 1.5 to 1.6 million. The semi-detached has gone to 1.3 million. The townhouse has gone to 1 million to 1.1 million. And surprisingly, the condo market, Shan, I've been saying that since 2020 pandemic hit. I said, you know what, something to watch out is the condo market. We will see the condo market going up, and actually that's what we have seen. The average increase in the condo market has gone up to 22%. So even people who were trying to get into this, first time home buyers, I still believe, and a lot of people have been saying, and we were actually discussing this in one of the meetings today, and someone was telling me, you know what, we got a new project launched up at Celeste Condos, and they said, you know what, $1,600 per square feet. What's going to happen, Yusuf? That's it. I think that's it. I said, you know what, 3 or 4 years ago, when Panda condos were launched, they were launched at $1,000 per square feet. And people said, oh my God, that's it. Now Toronto real estate market is gone, $1,000 a square feet. Who's going to come? Who's going to buy here? And today we're talking about $1,600, $1,800 square feet. Again, if you do the comparison in terms of the other, capital cities, when I talk about New York, when I talk about London, you know, the prices in Toronto is still way below as compared to these cities. So I think, like, the market will continue. The interest rates. What happens is, Ashan, whenever the interest rates goes up, we always see it, and it's a typical spring market as well. The inventory is coming out a bit more now. What we're also seeing is that whenever the interest rate goes up, about a month and a half, it does make a difference. The prices. I would not say they go down. The market becomes a little bit steady, which I think is a good to have a healthy market. That way, it's just not the sellers who are enjoying the benefits. At one point in time, the buyers get really frustrated, which is good when you have a healthy and a balanced market. I think we are looking at that. When I talk about in terms of the prices going up, I still feel like that the Canadian immigration coming up 2022, 23, we will see a lot more of the market going up, and this will continue to rise. Again, it's just not the immigrants who are coming from outside, it's the students who are coming every year as well. The students graduating, Shan, every year. Once they graduate, they're still looking for a place to rent immediately. As soon as they get their PR cards, they're looking for a place to buy as well. So again, in terms of the demand and supply, I think there's still a lot of shorter supply and there's a high demand. So we will always see this cyclic adjustment of going in and going down, and people think that, oh, the market has got a little bit soft now and it's going to slow down. No, it's not that it's going to slow down. It's the way the market works, right? It's a cycle of the market. Spring market comes in, you will see a lot more happening. What you will not see is that, especially if you're in the GTA, Ramadan is coming up. A lot of people in Ramadan, they don't want to buy property, they don't want to sell properties because it's a religious month, right? So there is a little dip you will see in the GTA market. You may not see it in the suburbs on that. So I feel like the market will continue to be strong. We will see some sort of a cyclic adjustment in not in terms of the pricing, maybe a little bit more in terms of the offers. For example, previously if you were getting properties, come up on 20 offers, 30 offers, but what people are also doing is they're trying to put it in a lower price and get into a higher price. My advice to all the realtors and to everybody is that go with the right price. Don't go in the lower price and expect that things will go up on it. So I think the market will continue to grow. Now coming back to Calgary, interestingly, I was talking to somebody today in Calgary, and we were discussing about the opportunity. So, Sean, the person was telling me he's a developer, and he said that in last 4 or 5 months, what he's seeing is that 80% of the sales are coming outside of Alberta. So where are they coming from? They're coming from Canada. They're coming from outside because I in 2020 when I was in Calgary, right? In September 2020 after pandemic, I looked at the Calgary price. I said, "Oh, this is the time to invest." Even today, I'll say this is the time to invest in Calgary because the prices are still much more affordable. A lot of people are going there. of course, you know about the insights about the oil. Since the oil is going up, so Alberta, they definitely enjoy that higher oil prices at the same time as well. So Alberta market, Calgary market is something to watch out. Vancouver market is something to watch out. And very soon, we're going to be in. We are already trading in these two markets, but we'll have our physical offices coming in these two markets as well.
Thank you, Yusuf. That was very insightful, and I totally agree with you. The market will go steady, and with rise in demand, especially from the students area sector, that will give a real boost to the rental market as well. And when once these students they get a job, they want to settle down because Canada has really positioned herself very strategically into the client's mind share, and so they have captured the mind share. So I think the market will stay strong, and it's good. So you have more work to do, and you've got a lot of things on your.
And even interestingly, what I want to add, Sean, is the rental market, right? The rental market, what we have seen in the last few months is that there's again a lot more high demand than the supply. So we are seeing multiple offers coming on rental properties, something we have never heard of. It was happening a few years back. I was seeing that, and then it stopped. But now, when people are putting in multiple offers, and it is expecting multiple offers on rental properties. So even to get a rental property, the rents have gone up, again, a high demand and less supply. So we've even seen the rental market. So what it means is that for the investor's perspective, when you're investing on money, you're seeing a higher rental return, what you were probably getting 5 years back as compared to now on that. So I mean that's the way real estate market is. So Shan, thank you so much for your time. Anything you want to add on before we say bye to our audience?
I would say that just inform your investors that hard times are coming, and in tough times the only fixed asset that goes up is land. And real estate will continue to stay strong. And as we have written one book and it's available, you can put it on your website. Real estate is a new global currency. So if you want to have sleepless nights, you can go to Bitcoin and bonds and equity. But if you want to have peace of mind, you will buy real estate, gold, silver, oil, arts. These are the things that will give
Yeah,
you real peace of mind.
great, great. Thank you very much, everyone. Thank you so much, Shine. Always a pleasure having you on our IQI Canada Evening Talks. Thank you so much for your insights. Again, what I said in the start of the evening talks. If you really want to know about the global economic outlook, follow Shan Saeed, follow him on LinkedIn, follow him on Facebook. Every day you will find information coming up from Shan, whether it is related to oil, whether it's related to interest rate, whether it's about a specific economic outlook you're looking for. When you follow Shan, that really helps our sophisticated investors. And we at IQI believe in working with our investors and smart and sophisticated investors and help them for their investment opportunities. So with this note, everybody take care of yourself. Thank you very much. And I'll see you guys soon. Thanks, Sean. Bye
Thank
bye.
you. Bye bye.